silver has done this only 4 times in the last 60 years. And what is that? I'm going to get right to it. And that is break to a new all-time high. And here's a historical chart of silver, and I have circled here those points that I'm talking about. So here's one, 1967, which is a modern new all-time high. It broke above the 1920 peak. I say modern because it didn't quite exceed the Civil War peak, but that was over 100 years, or 1967 was over 100 years later. Secondly, this was in 1973, where it took out the 68 peak and finally the Civil War peak. So that was the second one. Third one was here after it took out the 74 peak and then went parabolic. Now, which of these is the best historical comp to where we are right now? I would say right here. It's the 73 one. And as you can see, silver is on the cusp of breaking out of this beautiful, nearly half-century long base. And so this is a massive breakout. And when you break out of massive bases, like we saw here and then here, that leads to really strong moves that don't peter out in just a year or two. So that is why we are not in 1978 or 1979 for silver. Instead, we are, I think, in 1973. That's the best comparison. Silver, ultimately, after this correction, however long it takes, however long it lasts, you're going to see it double and get to $100 an ounce in 7 to 11 months after the correction. So it has done that in all 3 of these cases. It will do that again, but here and now we are in a correction/consolidation. And I just want to point out the same thing with respect to gold. This is the best representation based on history for where we are, or the best historical analog. It's right here. It's not right here. Because we are only 18 months into this breakout from this beautiful 13-year cup and handle pattern. Much like here, we had just broken out of this 100-year-long base. This was the greatest breakout of all time. Now, this breakout, I'm calling the second greatest breakout of all time. And this breakout here, probably not in the top 3 or 4, but it's still extremely significant. But the point stands. This move here is much like this move here. Not like 1979 to 1980. So that's where we are based on history. Now, let's get into the here and now, the weekly wrap-up. It's Friday, November 14th, 2025. I hope everybody had a great week. And precious metals, the last couple of weeks, they've been all over the place. So we have the daily candle charts here for gold, silver here. And we can see, put in a strong short-term bottom here. Some really nice buying here, but then some hard selling into the weekend. So where we are with respect to gold. Well, this is obviously the key support right around 3,900. We made a low, call it 3,890. So it appears that gold could come back and retest this, maybe even go a little bit below before it puts in a more sustainable low. So that's possible. Now, the last time gold had a correction, this is what happened. Down, up, down. In the up move, you had these really strong candles, but then gold went right back down. It did go below the low, but you know what? By the time it broke to a new low, you wanted to be buying. So that's a significant takeaway. If you see gold break below 3,900, there's really strong support here. So a break below 3,900 is going to bring you damn close to the actual bottom. And given that break, a day or two after the break, you want to be buying. That's a strong buy, in my opinion. So I would not be scared away by a potential breakdown here. And we can see the moving averages, they're coming up. So the longer this takes for gold to bottom and base out here, the higher these moving averages are going to go. And so this is just going to set up the next big leg higher. Now, silver, this is a bit of a positive divergence for silver because silver rallied back to the high, whereas gold did not. So that's good. We want to see that relative strength in silver. But the last 2 days, some hard selling in silver. So silver could come back down here to the 45s to retest this low. Again, if we were to see something like this, where silver breaks below this low right here, there's really strong support in this area, 43, 42. So if this were to break down, get to 44, 43, doesn't concern me at all. That's likely to be a significant low if that happens. And last thing, I don't know if I already said this, but corrections have 3 legs, down, up, down. Like you saw here, down, up, down. So this is what we're seeing. Down, up, down. Down, up, down. So keep that in mind. Now, before we get to the stocks, I just want to thank all of you for your support, signing up for the Daily Gold Premium. I appreciate you and your business so much. And those of you who have not, we would love to have you come aboard. In the Daily Gold Premium, we are all about buying and holding and trimming big winners. It's all about buying the best fundamental junior companies that have 3x, 5x, 7x potential over the next couple of years in this record bull market. That's exactly what we want to be. The juniors with high quality assets, assets with high potential. These are the assets that the big money is going to buy. The longer this correction and consolidation continues, that's going to be a really good opportunity to get in some of these stocks as they've corrected and as they may continue to correct over the next month or two. So we'd love to have you come aboard. Go to thedailygold.com/premium. It's a highly affordable service. I promise you will not find a better value. And if you own minors and juniors and you're looking for expertise in stock picking, company selection, there's no better service out there. Okay, let's move on and talk about the stocks. And so this is really interesting. I mentioned this in the video last Friday, and that is the positive divergence in the GDX advanced decline line, as you can see here. Here's the advanced decline line. Here's GDX. Now, for those who don't know, what is the advanced decline line? Well, this simply looks at an index, a market, a sector, and it's measuring the cumulative participation over time. So how many stocks in GDX are rising versus falling, and then it adds that to the day's total, and then it moves on to the next day and does another calculation. The reason the advanced decline line is so important is because this is a trustworthy leading indicator. And it's the same for the stock market as well. Typically, the advanced decline line or participation in any market or any basket that will weaken as the market is peaking or before it peaks, and at the same time, that will strengthen before the market actually bottoms. And so you see here, I've marked the historical positive divergences. And look, this is where we are here and now. The GDX advanced decline line has actually made a higher high. Now, if we go back a week or so ago, 7 trading days ago, GDX and GDXJ, many junior, they had corrected 25% already. We've had a good bounce in the minors, but look, participation has made a new high. This is a positive divergence. This is a higher high. So this is a really good sign for GDX and the gold stocks. But let me caution you, this does not mean a move like this is imminent. Let's go back to the spring and early summer and see what happened here. For example, we had a bit of a positive divergence here in the advanced decline line, right here. And what happened? GDX popped higher for a little bit, but then it consolidated for another 2+ months. Same thing here. You did see a strong positive divergence here, a higher high in the advanced decline line, and a lower high in GDX. So this is a strong positive divergence here. Now, it took another 3 weeks or so before the market made a move like that. So again, this positive divergence does not mean that this move is imminent, okay? But this is a very positive signal that tells us that when this correction consolidation ends, the miners are ready to blast off again. Okay, now let's finish things up here with the weekly chart of the silver stocks and the gold stocks. And actually, I want to do the gold stocks first. And I've sketched in here potentially how this could play out. Now, we know what happened over the last 4 weeks. You go back, we have these topping candles we talked about in the video. Then we have the hard down. Before last week, you had 2 weeks of a bullish hammer, a harsh decline here. The market got too oversold, popped up here, too strong of a rebound, so it closed off the highs. So what does that mean? Well, we could continue to go sideways in a range before the next leg higher. So this is not meant to be a prediction, but it could look something like this, where you get a leg down like this, then you get a rally, you get a leg down like this, another rally, then a bit more selling, and eventually the bulls gain control and it moves up like that. So we're not there yet. We're still on the correction and consolidation, and more time is needed. And what's the reality for us? If we see this come down again, that's going to be buying time. Now, same thing for the silver stocks. We talked about it in our video 4 weeks ago or so, the bearish candles. Then we had the hard move down, 25% decline. and SIL, 25% decline in SILJ. But what happened a couple weeks ago? Got too oversold. You can see the bullish hammers here, right here. Then we had a rally, big rally last week, sell off into the end of the weekend. So again, we're in a larger correction. It's going to take some time to play out. Be patient. And if we see more selling, that's going to be time to buy. Now, looking at these candles here, this should be really strong support here, 58 to 60. Now, with respect to SILJ, call it 18, 19. So right here, these should be very strong areas of support. So we see some selling. We get down here again, maybe we go a little bit below the low. That's when you're going to see shorts cover and more buying come into play. So again, be patient. Let's go back to the beginning of this video. We are set up for some huge moves in gold and silver over the next 18 months, but they're not going to happen overnight. They're not even going to begin overnight. We're going to need some patience here. So get your portfolios in order. Subscribe to the Daily Gold Premium so we can help you get into the best stocks to ride this incredible bull market. Because people, after this consolidation, there will be no turning back. Everything's going to be moving up, and you will want to be fully deployed at that point. That's all for this video. Leave a comment. Let me know what you think. Would love to hear from you. Thank you so much for your support. I appreciate you, and hope you guys have a great weekend. See you in the next video.